And it's all about COVID. It's Omicron now, whatever the next variant may be. Hopefully there won't be one,
Right.
but it's likely. We're not epidemiologists. We're not medical doctors. Maybe you are. I am not. But as an investor, you have to kind of think about it. How does it affect your thinking?
Yeah, well, you absolutely have to think about it. You can't ignore it. You can't get away from it. You guys were talking about going out to restaurants. We've got hundreds of professional athletes that are sidelined right now. So it's all around us. From a consumer standpoint, one of the things that I think about when we talk about the tapering happening a lot earlier, we have to be concerned about it. We're coming out of the Christmas season. So if you've racked up a lot of debt during Christmas and put it on credit cards and some of these buy now, pay later kind of plans, you've got to be careful because those tend to more closely follow interest rates. And so if you've racked up that debt, make sure you get it paid off here sometime before March when we're likely to see that first rate hike.
Yeah, I mean, listen, interest rates matter. They matter to, well, they're supposed to matter to bonds. Right now, Lee, they don't. Maybe you can talk
so
to
much.
that as well because bond yields are still low, but they matter to pretty much everything. Inflation is supposed to matter to everything,
Yeah.
right? I mean, but it's amazing, isn't it, how little the bond market seems to care?
Yeah, well, sometimes what we think we tend to get in the markets is that when we're not surprised, that's okay. You can anticipate bad news, if you will. You can anticipate things like, hey, listen, we just a few months ago, yeah, we're going to start tapering. And so we're going to speed that process up some. But the dynamics of what's been going on indicated that that was a likely outcome. I think had we seen something drastically different than what Powell said on yesterday, we'd had a different outcome. But this was within the expected range of possibilities is the best way I describe it.
Yeah, and the expected range of possibilities for the stock market and our viewers, Lee, is long, but everybody seems right now to be sort of reluctantly bullish. All the surveys are like, well, I'm worried about this, I'm worried about that, but yet
Sure.
they just keep powering stocks higher, a la yesterday. Are you reluctantly bullish, or are you truly bullish on at least certain parts of the market?
I guess the best way to describe me is being reluctantly bullish. Until enough things come together to say, yeah, we're going to have this downturn last longer than a few days or perhaps a week, put me in the reluctantly bullish camp. There are things that I see out there in the markets that I like. Hey, everybody that's got anything invested in any sort of domestic or large cap fund has got to love Apple. Apple seems to just keep rolling along and dragging everybody else with it. You've got a dynamic there where you get to have a bit of the best of both worlds, where you get some participation in the tech sector and the stay-at-home play and that sort of thing. But Apple's a tremendous company. You're getting a little bit of a dividend yield there. So again, candidly, I love it, but still putting me in that reluctantly bullish camp.
Yeah, and you talked about Apple, Lee. Is that maybe not your best idea, and I called it a utility on the air the other day. I took some heat. People like, it's not a utility. I kind of felt like it was because I paid them this like almost monthly fee, regardless of even thinking about it. Is Apple one of your best bets for 2022?
I'd say yes. And like you want to call it paying them that monthly fee. Here with a wife and two daughters and that kind of thing, Apple gets a lot of our money, candidly. But I love Apple. For full disclosure, I have a holding. Not that it matters with a $3 trillion valuation. But yeah, I would say Apple is one of my best picks from a 2022 perspective.